Okay. So as from the 9th of March, that's Monday, in 2 days' time, I'm going to be giving out a whole lot of signals, to those on the Telegram group. It's going to be so right through till the very end of March. And the signals I'm going to be giving out are basically going to be, precision trades, whereby you'll be looking to get out, out of the trade after securing about 25 pips at least. Now, what I intend to do basically is to post the signal and tell you how many pips to go for as a minimum. So basically, I'll be looking to post a signal. For instance, I could say Euro USD, buy Euro USD at this price. I will specify the price. They are not going to be so much scalp trades. They're not going to be scalp trades, obviously, because it is the case that people are perhaps going to be catching the trades at different times. Somebody could log in after, I don't know, 2 hours of it being posted, and the trade would have moved tremendously. So I would give the price and also tell you what number of pips to go for. So if you're going to be going for 25 pips, 50 pips, that would be basically, left for you to decide. So if it is going to be, like, I'm sure most of you who know about my trading strategy or style, perhaps, on some trades, I would say there is going to be a TP1, TP2, TP3, or TP4. So that is going to be pretty much the same thing here, but regardless of whatever trade or whenever I give the signal, it's going to be you going for a minimum of TP1, which is, 20 to 25 pips. So obviously you would then decide, how you want to go with that. Now, if I say, we are targeting like 125 pips, then perhaps, that is going to be more than TP. That's going to be like TP4. However, what I am going to do is to, put some guidelines, to post some guidelines on the Telegram group that people can actually follow. I'm going to be posting most of the trades on the GWA updates channel. I'll leave a link, below shortly, so that people can join. I will also leave a link to that on the general group, so that people can actually join. Now, the reason for that obviously is because that channel, can only be accessed by myself and the admin. Not everyone can post there, because we don't want it to be that people miss the trade. So I'll be posting most of the trades there. But tonight, I can see that there are, a few people on here who are not used to taking my signals. So I'll be seeking to explain, how to go about it, perhaps how to manage it. I suppose that would help, so that people don't, misunderstand or make mistakes. After all, there is money involved here, and we have to be careful when we are working with people trading their money. So even as we have the chart we have this chart on our screen, this is the chart for Euro USD, the 1 hour time frame. Now, when I give out my signals, well, with the VIP members, sometimes I would just tell them what time frame it is, because obviously they know the strategy I'm teaching, I'm perhaps trading off. They know what to do with my information. So I could basically just say, the setup is good. For instance, let me bring this up. This is the Ichimoku. This is the Ichimoku cloud, for instance. The Ichimoku Kinko Hyo. So I could basically, just tell them, that tell them to check the 1 hour time frame on the Ichimoku. I don't need to say more. I could just say, check the 1 hour on the Ichimoku. They will go check it because they've been taught how to trade the Ichimoku. They will know if the price is bullish, if the market is bullish or bearish, and know what to do with it. Or I could say, go to USD CAD on the 4 hour time frame. If I tell them that, they basically will come and see this as it is and know what to do with it. However, that's not what I'm going to be doing, because obviously all those who are receiving the signals as from Monday are not going to be those that have learned from Generational Wealth Academy. So I'm going to be giving more precise information. Now, what I tend to do, even as we can see on this particular pair, let's go to a naked chart. Even as you can see on this particular pair, USD CAD on the 1 hour time frame, we can see the price here at the top right hand corner. That is the price at which the market closed on Friday. So I could, for instance, post and say, buy USD CAD at 1.34227. I could say buy at 1.34227. I would obviously then go on to say, let the stop loss be, okay, this is perhaps where I'll be asking them to buy. Let's just type that in, for instance, 1.34227. So I could be telling them to enter the price, enter the market or the trade at the buy at that price.
Is it something recent, this one?
Can we be muted, please? Can we mute ourselves, please? So I could say enter the price at that. And I'll give a stop loss of maybe somewhere around here. Let's make that red. And give a stop loss maybe somewhere around there. And a take profit of somewhere around there. So from the entry here to there is about 40 pips take profit. The stop loss could be 30 pips. So in that case, I could basically say enter Euro USD. I could say, sorry, this is USD CAD rather. It could be USD It could be USD CAD. It could be buy USD CAD. And I could give the entry. Never mind my writing. Yes, it's been recorded. This session is being recorded. So that would be the entry. I could then say the stop loss is 1.33929. Now the take profit, if it's a trade that I expect to move in a big way, you know, say maybe I expect to move about 150 pips. I suppose I could say final TP. Final TP, which is TP4. Sorry, let me I could say final TP. Is equal to 120 pips. I could say the final TP is 120 pips, which I would expect everyone who is trading, in a sense, everyone who is trading should know that. I mean, the truth is, if you are trading and you don't know how to necessarily work out 120 pips, then fine, you know, it's a case that you would need to learn how to work out the pips. Now, going by this, just working from here, you might not be able to work it out precisely on using the numbers or using these numbers, but one of the ways of guesstimating that is to basically go to your crosshair tool somewhere here. You click on that. If you entered here, you place your crosshair, you press down the mouse and drag. It tells you the figure. You can see, you might not quite see the figures there, but the figures are there. Just where I'm moving my cursor now, you can see there are 3 numbers. It might not be large enough, but there are 3 numbers. I would expect you to try that, you know, once you have, once we are done with this webinar. But there are 3 numbers there. There is, even as we have it now, you might not see, but I'll call them out. There is 16, then there is a slash, there is 663, there's a slash, and there is 1.33822. Now, the first number, which is 16, tells you how many candles you have moved. That's from here. If, for instance, you place it here, you are on this red candle. By the time you move the cursor, you know, 2 periods away, 2 candles away, that's 2. If you move it further, even though you are moving up, it's counting all the candles that it's crossing. So if I move it up here to this candle, it tells me that that is 18 candles later. So it will be 1, 2, 3, 4, 5, 6, 7, up to 18. This is the 18th candle after this one. Now, as long as I'm on this candle, whether I'm at the top of it, whether I'm above it, it's still 18. If I come down to it, to the bottom of it, it's still 18. So if you were to drag it to this bullish candle, it tells me it's 43 candles away from here where I started. So that's 43 candles away. If I was to go there, it tells me it's 70 candles away. If I go here, so you get the idea, you get the picture. So that is basically how you measure, for instance, how many candles away you are. That's also how you would measure the number of pips that you have. So let's go back to the crosshair there. Another way of getting the crosshair is to go to Insert. Just 1 minute, let me take a sip of water, 1 minute. So what you basically want to do, the crosshair basically helps you count the number of candles that have passed. It also helps you count the number of pips. So if, for instance, we started here at the bottom, if we started at this candle here, and the price moved up, we are dragging the crosshair. By the time it gets here, it tells us in the middle number that it is about 96 pips away. So it has moved from here to here by about 96 pips or 97 pips. So even as I said, there are three numbers there. At the moment, we have 17, we have 968, and then we have the price. Now the middle number, which is 968, basically tells us the pip count. 968, we will drop the last number on the right, we will drop the 8 and go with the 96. That tells us it's about 96 pips. Now, I know that even then, that's going to be a challenge, just writing the final take profit as 120. What I believe, what I suppose I'll do, I would have to give the number. I would have to give the precise number. So fine, I'll be giving the precise number, but what I am saying is, if you are already trading and you do not know how to work out your pips, because it is very important, it's part of the fundamentals or the basics of trading. If you don't know how to work out your pips, I suggest you do, also go back and learn how to do that. It is indeed very important. So what I'm going to be doing is I would spell out the entry, as in here, 1.34227. I will spell out the stop loss, 1.33929, and then I will spell out the take profit. So if there's going to be a take profit 1, 2, 3, I will do that. What I suppose I will be doing is I would post and spell out TP1, which is take profit 1, and TP2, take profit 2. My TP1 usually is about 25 pips. My TP2 is usually between 40 to 50 pips, depending on the pair. And then obviously the TP3 and the TP4. So if I write TP4 there, I might not spell out the whole thing. I might just say 120 pips. I might just say 120 pips. I suppose that would also force those taking the trades to go learn how to work out the pips. I believe I have a video on there on YouTube I will search it out. If I don't, I will get one done to show how to work out pips, because it is vital if you are a trader to know how to work out your pips. But at least for the sake of this March signal blitz, I will spell out TP1, TP2. So basically, those who want to go with the signals will target either TP1 at 25 pips or TP2 at 50 pips. In that case, they will have to take 2 trades. If they are going for TP2, they will place one entry, take one position, and put the stop loss at TP1, and then obviously take the second one and put the stop loss at TP2. If they can't work out the pips, then it's pointless for them even going for TP3 or 4. It could get very messy. I mean, if somebody cannot work out the pips, I wonder if it is the case that they'll be able to work out the stop loss, or if they'll be able to move their stop loss accordingly. It's not going to be, because there are going to be a lot of signals going out. I would not so much be micromanaging the trades. They are either going to hit take profit or hit stop loss. And with the kind of signals I'm looking to give out, over this period, there are going to be trades that would most of the time hit take profit. They will most of the time hit take profit, at least TP1. One of the reasons why we are having this March signal blitz is, one, to give back to the market, to give back to traders, as it were, so they know that yes, Forex does work. You can make steady or consistent profits in Forex. Two, a number of people have contacted me saying that they don't have the money to pay for Forex education. So fine, we provide Forex education. I will help you pay for it in the sense that I will give you some free signals that will help you generate some profits and build your account so that you can actually pay for the service. Like I said a while ago, and this might sound harsh, there are lots of freeloaders on the internet, which is fine, which is fair enough. Some people sincerely do not have the money. But my thing is, it's not for you to stay a freeloader for life. You have to get to a point where you can pay for your Forex education so you can actually begin to take your own signals, as it were, enter your own trades. It's very important. I really think that, spoon feeding people for life, it's not the way to go. Like we know about teaching the person how to fish, and they will have something to eat for life. So that is what I believe in. That is my principle. That is, the kind of ethos I have, and that is what I want to communicate. So fine, I would provide this for more or less 3 weeks for free. By then, people would have been able to raise enough money to pay for the Forex education and even fund their account. Now, what I am going to be doing is, I'm going to be, writing up a list or a guide, as it were. It would include what I advise you trade with regards to lot size. It would include what I advise you trade with as it relates to the lot size. If you think, if perhaps, for instance, I'm giving signals, throughout maybe Monday, Tuesday, Wednesday, and all the trades win, or about 80% of the trades are winning trades, or even 70, somebody might get all confident and begin to trade with a standard lot size. No, it doesn't work that way. You might have had a winning streak. You might have had a winning streak. It doesn't mean it's going to stay like that every day. Believe me, no trader, no signal provider out there wins all the time. even though they've had a winning streak, you don't know when the tide is going to turn. Not because they are not good traders, but just because, I don't know, something has gone wrong, in the market or whatever. So it will be the case that you have to be consistent. You have to use a lot size that is appropriate, that matches your account size all the time. So I'm going to be giving a guide in what I draw up on by Monday, maybe by Sunday night or Monday. The lot size people are advised to trade with. So that is basically how I'm going to be doing it. I mean, I don't know if there are any questions so far. If there are any questions so far regarding what I have said. I know Nelly says to show 100 pips, please. I'm not quite sure what you mean, Nelly. 120 pips. Okay, well, fine. Let me do two things that might answer your questions. Let me do two things that might answer your questions.
Pastor Francis, can you hear me?
Sorry, just 1 minute. Let me quickly answer Nelly.
Okay.
I'll come back to you. 1 minute, 1 minute. Okay, now with regards to 120 pips, let's try and work out 120 pips here. Using this figure. Okay, so let's say, let's do this. So this is our 120 pips. So when you have this thick horizontal line, this thick horizontal line is where the price closed. That's where the price closed on Friday. So if we say, okay, let me use it, because what I'm doing here now, if we were to place our crosshair here and drag it down, it does not quite, the lowest candle we see here is this. So if we say, let's come all the way down here, that's not quite 120 pips, that's like 100 pips or so. So let's go to a higher time frame. Okay, then we can get up to 120 pips because the lowest here is about 220 pips. So let's basically work with this. Just 1 minute, guys, just 1 minute. Okay, I mean, somebody has asked, I'm going to answer this question anyway, but somebody has asked for me to explain how to apply the trading stop loss. I suppose you mean trailing stop loss. Could you also type in your name? Let me know your name so that, because it doesn't show me your name there. It only shows me that you're using Samsung. Type in your name. Let me know what your name is. Just 1 minute, guys, 1 minute. Just 1 minute. Okay, so we are on a higher time frame now. just so we can actually get 120 pips. So I'm sure you get you notice what I've done there. You know, on the 1 hour time frame, if we're to go back down, it does not give us up to 120 pips. So I had to increase the time frame. I mean, that tells us obviously that you will get to see more. You'll get to see more even on a larger time frame. So fine, this is the 4 hourly time frame. Now we're going to work with this. We're going to work with this number. We're going to work with that number. Can you see the number on the top right hand corner? Type in a 2 if you can see the number at the top right hand corner. If you can see the number at the top right corner, which says 1.34227, please type in a 2. Okay, I don't know if everyone can hear me. If you can see the number, guys, type in a 2 if you can see the number 1.34227. Okay. So basically what we'll do is let's work with this. We're going to work 120 pips to the downside. So if we believe that where the price closed on Friday, the price is going to drop 120 pips, let's try and work out where it would stop. So what we'll do obviously is let's work with 1.34227. Now, when it comes to currency pairs, with some brokers, it's different with different brokers, but with some brokers, it has 5 digits after the decimal point. So we have 1, 2, 3, 4, 5 digits after the decimal point. With some brokers, they only have 4, because the first 4 digits after the decimal point is what really counts as the pips. This one is basically represents a pipette. So what you want to do, if you are going to add or subtract from the pips, you're going to have to ignore this last digit. You have 5 digits here after the decimal point, but on yen pairs that have have yen in them, maybe pound yen or CAD yen or USD yen, they won't have 5 digits, they would have 3 digits. But since we're on USD card here, there are 5 digits, so let's work with this one. So you will ignore this one because it represents a pipette, which is a fraction of a pip. Since we're looking at 120 pips, we are going to be taking away 120 pips from this one. So we're going to be working it like so. So we ignore this one. Now, if we work that out, 2 minus 0, it's equals to 0. 2 minus 2 is equal to 0. 3 minus 1 is equal to that. And this 3, obviously, we bring it down here, point. So that would be what we have. So basically, if we take away, if we say the price is going to drop by 120, it means it's going to drop to 1.3300. So if, for instance, I was to say enter a trade at 1.34227, and we're going for a TP4 of 120, if I don't, assuming I did not call out the price or the closing price or the take profit, if I did not call this out and I just said we're going for 120 pip take profit, you basically just work it out like so, and you know where to place your take profit is going to be here. So let's now look for 1.3300. That would be, let's work with this. Let's work with this red dotted line. Okay, just in case you can't see it, let's change that. Let's make it a thick line. So if you now want to figure out where to place your stop loss, you can now just change this, for instance, 1.300. If you click on that, it tells you it's going to be here. So you are therefore saying that if you enter the trade for a sell and it does go down like you thought it would, it will come all the way and stop here. Now let's just use our crosshair and measure it. We click on it and drag it down, and we can see it's more or less spot on. I mean, the crosshair says the crosshair says it says 121 pips, but it's basically more or less correct. I mean, I suppose the difference here is this pipette that we did not so much consider. However, so we see that it is more or less spot on, about 120 pips or so, even as we have worked out. So that is basically how you work it out. But good enough. I mean, I suppose it is a good thing that Nelly asked the question, because I suppose we now have something for people to watch that would help them figure out, how to work out their pips. But obviously, if it was the case that we were going to be buying, what we would do, let's just erase this. So what we're going to be doing, if we're buying, if we're going to buy this 120 pips, if we say it was going to be a 120 pip move, it will be something similar we'll be doing. We would only just be adding instead of subtracting. 120 pips. So there we have 2, there we have 4, there we have 5 and 3, that decimal point, and then we have 1. So that basically would be, if we're buying, we would expect the price to move up like that. Let's have a look at that. So if we're buying and our take profit was 120 pips away, it will be 1.3542. 1.3542. Now, obviously, this is 4 digits. If you want to make it 5 digits, you can either add the 7 here at the end, or even add 0 to make it the 5 digits. You know, let's just go with 0, and let's see where our price would be. So we can see here, this is where it would be. So this is our entry here. If we were buying, it will be like 120 pips there. And if we were selling from here, the price would end here. So we can see it is pretty straightforward working out our pips. But like I say, just to make it easy for everybody, I would indeed be spelling it out, you know, the take profit levels, even come Monday and onwards, you know, for people to actually, you know, participate and, you know, get the pip count right. Okay, so basically, I mean, there is nothing much more to say about that. One of the questions asked earlier on was, what pairs are the best to trade, or something like that. Now, the truth is, there isn't any pair that's the best to trade. You know, I mean, I, for instance, would say, if you have risk in mind, if perhaps you are thinking, what pair should I trade so as not to over leverage my account, then I would say, obviously, you want to avoid the pound pairs, because they are very volatile and they will usually require you to have a bigger stop loss than most other pairs. Another asset or instrument that you would want to avoid is gold. Similar, you know, to pound pairs, is volatile and it will require you to have, you know, to use a bigger stop loss. But of course, the indices as well, you will have to use a bigger stop loss, you know, than usual. So in that sense, I would say, you know, maybe if you have a small account size of about, I don't know, 200, 300, you want to so much avoid those pairs, at least for now, until, you know, you have built up your account, you know, maybe to about, I don't know, maybe about 500, 700, then you can begin to use, you know, those pairs. However, if you do have a good strategy whereby, you know, you have tried and tested it and your drawdown is little, if you have a good strategy whereby you have a little drawdown, then of course, even with 200 pounds, 300 pounds, you can actually, you know, trade pound pairs, you know. But I would say, you know, to lean towards the side of caution as opposed to, you know, going on and trading some of those pairs or assets. One thing, you know, I would also want to point out with regards to lot size, you know, some people would say they use a fixed stop loss. Maybe they use 30 pips for all trades or 50 pips for all trades. Now, fine, I suppose that depends on their strategy. Like I said, or like I would always say, there are some strategies that require you to use a fixed number of pips for your stop loss. But with some other strategies, it's actually advisable that the stop loss you use is not fixed. You know, it will be the wrong thing to do to use a fixed stop loss, you know, for some other strategies. You know, for some of the strategies I trade, I would use structure. Let me just take this off. I will use, you know, structure to determine my take profit or stop loss. So for instance, if I were to enter this trade, let's say I was to enter this trade, for a buy, sorry, a sell. Let's say I enter this trade here. Okay, let's say I entered it here. That's the last candle there. Let's say I entered it there. It will be the case that if I was looking to buy, I mean, obviously I'm expecting the price to go up. But what happens if the price goes against me? Where would be my stop loss? I would have this structure in mind. I would have this low in mind. I'll have a swing low in mind, either this one or here. Somewhere around here is where I will have in mind to place my stop loss, depending on the strategy. Now from here to here is about 120 pips, like we said. Not everybody will want to go for 120 pips. So it could be the case that you might want to consider this swing low. Now, if the candle is here, the price is here, this is a swing low, that's a swing low, a lower low, and so forth. You might want to work with the very last swing low, or perhaps the swing low before that. Now, like I say, going with this one might be too much risk reward, if you like, or too much pips. So if you want to work with this, I would say to add, to use 2 times ADR. 2 times ADR, which is average, sorry, not ADR now, but ATR, T for Tango, ATR, which stands for average true range. The average true range basically is an average of the previous number of pips, maybe the previous number of candles, maybe the last so many candles. It could be 14 candles from here, for instance. If you are here and you count back, let's go to the 1 hour. Let's use the 1 hour to make it easier. Okay, so if, for instance, okay, I suppose this is actually better for us, because we were on the 4 hour a while ago. Obviously, the swing highs and swing lows will be larger. I would usually, as it were, use the 1 hour time frame for stop loss, for at least my stop loss. So let's go to the 1 hour here. So I mean, from here where you see the price closed, to here is about 42 pips. Now it doesn't seem very bad. I'm sure people will say, okay, fine, I can cope with that, about 40 pips. Whereas if we had been working with the 4 hour like we did earlier on, the swing low will be like 90 something pips, which is much, because you're going to be adding to that number anyway. So let's go back to the 1 hour. So if you were to use this as your stop loss, I will be adding some pips to that. So that is the swing low. I will add some pips to this low. So I could place my horizontal line here as a swing low, add a few more pips to it, because I know this will be an area of liquidity where, as it were, there are still people are going to be placing their stops, for instance. A lot of people are going to be placing their stops here. Others, on the other hand, are going to be, well, their stop loss, as it were, and others are going to be placing their sell stop orders here. So round about the swing low and swing highs, you will normally have a lot of stop losses and also buy stops and sell stops. In this case, it will be a sell stop. So the market makers know that. So they can easily swing the price down before taking it back up. That obviously we know is what we call stop hunting. If you don't know what stop hunting is, that will be for another day. But the market makers can swing the price here. So those who play their stop loss here, they will swing it and bring it this low, lower than this area. They could bring the price this low. I mean, after all, consider this candle. That's a huge candle. Let's just measure. That's a candle of about 80 pips. If the market makers pushed it up at this point, who say they cannot push it down? So if they were to push it 80 pips like it was here, like they did here, if they were to push it 80 pips down here, it will be around here, which obviously means they're going to clean out a lot of stop losses here. And obviously you end up losing that trade that you are in. So they will clean out the stop loss here. And what they will do, once they do that, at the same time, it will trigger those that have their sell stop orders. It will trigger the sell stop orders and they'll take it down. Obviously, they'll be in profit. Those who come out on time will basically be the ones who make money, because once they do that, they might then take up the price again. And if you're not careful, if you've not moved your stop loss, it will then clean you out as well. So by swiping or by pushing the price down and then taking it back up, they've made a lot of money for themselves. They've cleaned out a lot of stop losses, triggered your stop order, sell stop order, and then take it back up and clean out the stop loss as well on that side. So they cleaned out the stop loss for the buys and the sell at the same time. So obviously, that is basically why you need to understand how the market makers trade or how the banks trade, so that you will beat them at their game, or you will not, have your account wiped out. Anyhow, so like I was saying a while ago, where would you place your stop loss if you enter the trade here? This is the swing low. So you have the swing low in mind. Do you just add any number of pips to it? Well, people could. Like I said, some people would add 30 to it. So in a sense, if you were to add 30 to it from here, that would be like, you'll be stopping around about here. Let's just put our, so in the sense, if you were to place your stop loss here, you entered here, that would be like 70 pips. Now, that might seem a lot to some people, but the truth is, it's better to actually go with 70 pips and remain in the trade than to place your stop loss here and any move down takes your stop loss out. And we know how they do it. They'll move it down, take your stop loss out, and then go back in the direction you knew it was going to go anyhow. So if you were to place your stop loss here, which would be 30 pips plus where you have the swing low, that obviously is good. But if you wanted to go with the ATR, if you wanted to be more precise, I will use the ATR. To get your ATR, ATR is a built-in indicator that measures the last number of candles. Let me just bring it up first. So if you go to insert here, go to indicators, you can see there ATR, average true range. You click on it. The period here is 14. The period obviously referring to the candles. I'm sure you guys have heard me say period a number of times, like the 50 period candle or whatever. It basically the 50 period when talking about moving averages. the period there is 14, which means it's looking at 14 periods or 14 candles from the last candle here. You know, so let's go with 14 there. We will not so much bother with that. So we just choose the average, bring up the average true range indicator, the ATR indicator, click on that. It will open up the indicator window here. And if you place your cursor at the very tip of the last bit, not just anywhere, if you place it here, you are going to be looking at the average true range for the candle that it lines up with at the top. If you place it here, you are looking at the average true range for that. But the average true range for this candle is what we want. So you go to the tip of it, and you can see the readings there. You might not see it there, it's very small. But when after this webinar, or when you're watching the replay, you can then, you know, do exactly what I'm doing here now to see the figures there. But I can tell you, even the value it gives there are 3 lines there. The bottom line, it talks about value, which is the average true range. The average true range here is 0.0020. That's what it says. 0.0020. So if you look at every candle here, it's taking the average of every candle. The average of this particular candle is, sorry, not the average, the peep of this particular candle is about 20. Let's consider this, for instance. This is about 23. This was the longest, I believe. That's about 29. So the average of the last 14 candles, like from this candle, let's look at it. Okay, that's the 14th candle. So the average of all these candles, it tells us, is about 20. Because when we place our cursor on here, it brings up the figure as the value saying it's 0.0020, which is 20. I mean, the 20 at the end is what you take, 20. Let's just go here, for instance. Here, it's the average true range here. If you line it, if you trace it up to that candle, the average true range here, it gives us a value of 0.0017. Obviously, the average true range there is less than the one here. The average true range here, obviously, we are looking at the last 14 candles. So wherever you place, wherever you are seeking to find your average true range is 14 candles behind. So the average true range here is 0.0019. So that's basically you placing your candle here, go 14 candles back. That's that. Now, we're using 14 candles here because that's the default. Some people might want to change this to 20, which means you are looking at the average true range of 20 candles. So that's what that means. But let's stick with the default of 14. So it has given us an average value of 20 here, 20 pips. So what you will now do, it means the ATR, the average true range, is 20. You could multiply that by 2. I would usually multiply by either 2 or 3. So we see that this is the swing low. I would add average true range times 2. So average true range being 20 times 2, that's 40. So I would add like 40 pips to it. So someone has chosen to go with 30 pips plus the swing low. I will be going perhaps with 30 pips. So let's do that. Sorry, not 30 pips now, but 40. You know, because ATR is 20 times 2, that's 40. So I'll be placing my own stop loss maybe somewhere around here. Let's see. Yeah, somewhere around there. So if the candle was to move down this low, then fine, let them take me out. If it was to move down this low, let them take me out. But most of the time, obviously, you know, if the price is trending, it would not come this low. But we're not market makers. We know they will do anything, you know. So, I mean, let me say this. One of the reasons why the market makers would not move the price this low unnecessarily, unless there is news. If there's news anyway, you don't want to be trading. You want to be out of the market unless you are trading the news. You know, if the pair of the trade you're already in is going to be affected, or you think might be affected, then perhaps you want to hedge it, or you want to close out before the news. You know, if there is no news, there is really no reason why the market makers will move this. I mean, we know they use some news events as an excuse for moving prices in such a big way. You know why? Because they can only really, if they begin to move the price like that, you know, every time, it will create an imbalance, which is sometimes created. It will create an imbalance, which obviously is sometimes created, but such imbalances are created, if you like, with a reason. They want to justify, they can justify it. What do I mean by an imbalance? Just to quickly say that, I mean, obviously we are learning a lot more than, you know, perhaps we're bargaining for today. That's fine. There is an imbalance here, for instance. I'll have to explain it in more details to, you know, to the VIPs in, you know, another day. But we have an imbalance here. You know, we see that there was a big move here in this candle. There was a big move here. This was the last candle. This was the high of the last candle. So between here and here, there's an imbalance which has to be filled. There is a gap which has to be filled in a sense. There's a gap which has to be filled in a sense. And that is why I'll be banking on the price coming back to this point. Like I say, I'm not going to explain that in detail. We might be here all day or longer than we planned. But let's just go with this. Okay, let's go with that. So this is the high of the previous candle before this big move. So let's place it there. That's where it is. So because of the imbalance between here and here, the imbalance between here and here, or maybe even the way it closed there, but let's go with that. They would have to fill this space. They will have to fill the space between here and here. Never mind if you're not quite getting it, but you know, we will explain. That's not relevant now. I just thought I would throw that in since we are talking about something that's a bit relevant to it. So the space between this yellow line and this yellow line, they would have to fill at some point. You know, we see that the price kind of like moved down slightly, but it didn't quite get to the yellow line. It moved up. I won't be surprised if by Monday, Tuesday, or sometime early next week, it drops to this point, you know, before it goes back up. It's similar to, in a sense, it's similar to when you have a gap in the market when the market opens on a Sunday night. But anyway, that's for another day. I'll just leave it at that. So what we were looking at, what we're considering basically is, let's take this off. So what we're looking at is basically entering the price here for a buy and placing your stop loss, not bang on the swing low. A lot of traders, newbie traders, will place their stop loss there. They might even place it slightly lower, but that's nothing really. The market makers know that, you know, a lot of traders are going to be placing their stop losses there. I suppose, that is one of the reasons why when I send out signals, you know, with the Supremo signals, I do not so much give stop losses. Why? Because what can happen is by the time we now have 1,000 members, by the time we now have 10,000 members in GWA, if I give stop losses and take profit points, what would happen is the market makers will see that there's a cluster of stop losses there. Oh yes, some of you guys didn't know that, but yes, that's what happens. They can see where the stop losses are. You know, they can see where the take profit are, they can see where the stop losses are. So if 1,000 of us or 10,000 of us as members of GWA place our stop loss at exactly the same place, they can see the cluster of stop losses there. They'll be looking to target it and clean all of us out. So that's one of the reasons why I do not so much give stop losses and take profits, you know, for some of our regular trades. Anyhow, that is how or where I will place the stop loss. And I suppose that's, let me see if there are any questions. Just 1 minute, just 1 minute. I suppose that's, okay. Okay, can you still hear me? I mean, someone says they can't hear me anymore. Can you, if you can hear me, guys, type in a 1. If you can still hear me, type in a 1. If you can hear me, guys, type in a 1. Okay, all right, that's fine. So, okay, thanks. So basically, I mean, if you can't hear me, Samsung, I'm not quite sure what the name is. I did ask for your name, but I'll call you Samsung. I'm sorry, guys. You know, but anyway, if it is the case that you want to know about TP123, what you basically do, like I said a while ago, I would give you what the figures are. I will give you what the price is, you know, for TP1, TP2, TP3, and so forth. You know, so basically, if you are going with TP1, 2, 3, 4, you will basically, the best way to do it, or the easiest way to do it, is to enter 4 trades, to enter 4 positions, you know, working with each of those take profits levels. So the first trade you open will have you will have a stop loss, or you have a take profit for that using the TP I give you. Then you enter another one using the second TP, the third for the third TP, and the fourth TP for the fourth trade. So that basically, if that trade goes in our desired direction, each time the take profit is hit, it will close out that trade. So if TP1 is hit, it will close out that trade, leaving 3. If TP2 gets hit, it takes that one out, and then, you know, and so forth. I mean, obviously, if you want to do it differently, you could decide to enter with, you know, a particular lot size and close out, you know, trades each time. That's going to be a bit more tricky. And close out trades yourself manually, you know, taking partial profits. That's going to be more difficult. So for instance, if you were going to be trading using 0.01 lots for every 100 pounds you have in your account, or 100 bucks you have in your account, you know, it means that if you are going to be going with a trade that has take profit 4, it will be 0.01 per 100 for every what's it called, every position you enter. You know, so I mean, it's going to be tricky, you know, if you're going to do that, if you're going to place it, if you're going to take just the one trade. So I advise you definitely, you know, break it down, you know. But if you've been trading 3 months, I would say to go for a maximum of TP2. You know, forget the TP 4 or TP whatever. Go for a maximum of TP2. Otherwise, what you could do is you will have to monitor the trade. I mean, like I say, I'm going to be giving out a lot of signals, so it might become a bit more difficult to manage. So what you could do is take a few of those signals, take a few of the signals and manage those ones, whereby when the price gets to take profit one, you could close it, or if you want to let it keep running, then move your stop loss each time. Move your stop loss each time. I suppose that's the best I can give you for now with regards to that. But it's you are going to have to get some Forex education. Feel free to contact me as well, and let's see how we go with that. I don't know if there are any more questions. I mean, Pastor Undu had a question earlier on, or a comment. If you can unmute yourself, please, and let me know.
Yeah, the question. As I since you're going to be sending lots of signals, is there any way you're going to avoid people over trading by taking too many signals or having too many positions open? Or would you just recommend that some people take a maximum of certain number of positions open, so that they don't maybe get to a position, maybe they're in drawdown or something like that? How do you, or will it be left to individuals to, just in case that some of the trades are in the negative?
Yeah.
How will they know to make the adjustments? Because it's very easy that somebody can have too many positions open and they get overwhelmed.
Okay. I mean, that's a brilliant question. I mean, it's good you brought that up. So basically, what it is, like I plan to do is to give out, signals, obviously because I'm based in the UK, I'll be giving out most of the signals during the London and the New York sessions. There are going to be some signals which will be given during the Asian session. I mean, the thing is, they are going to be, I'm going to be giving out the entry price, and so it will be the case that some of those trades are going to be buy limit or sell limit trades. I'm not going to be doing sell stop or buy stop. It's going to be buy limit or sell limit, which obviously means that the price would have to come, down to or up to the entry price before it is triggered. So that will give people time to enter the trades. Now there are going to be some trades that will be entered immediately. Immediately in the sense that I could post. I mean, for instance, it's about 4 minutes past 10 now in the UK. If I was to post a trade, and those who are online basically will see that a trade has been posted, they could go check their chart and see that, okay, the price is not quite there yet. Let me place a buy limit order, and wait for the price to trigger. Now, someone else might come an hour later, and just when they open up their chart, the price is just where the entry is. So in that case, they would have to enter immediately. They will have to, or perhaps it is like 2-3 pips away, and they cannot wait. They basically say, okay, let me just enter and go with that. So in the sense, for them, it's going to be as though it's going to be a market execution because they're entering straight away. Whereas for others, it will be the case that they have to place an order. Now, coming to your question, if I, for instance, give out maybe 6 signals, or let's say 5 signals within an hour, it will be advisable for people to enter a maximum of 3 trades at a time. You could enter a maximum of 3 trades at a time, maybe even 4 or 5. However, you are going to manage it yourself in the sense that you are going to move your stop loss accordingly. So if one of the trades, basically, I say we are targeting a maximum of 120 pips. Let's go back to that 120. We're targeting a maximum of 120 pips. It could be the case that once the price has moved in the desired direction, and you have moved your stop loss so that you are now not at risk. It's now a risk-free trade, which basically means if going back to this one, for instance, going back to this, if for instance you entered the trade just 1 minute, let me do this right. If for instance you enter the trade here, by the time it moves here where the market was, you are 25 pips in profit. Now this is where you enter the trade. This was your, let's say this was your stop loss. The price has now moved up here. So what you could then do obviously is to move your stop loss above the take profit level, which means your trade is now risk-free. So that even if the trade now comes against you, you know, it will close you out, but you will close out in profit, not in loss, not in a loss, you know, because you have moved to break even. So in that case, once you have moved some prices or the trades on some, the price on some trades to break even, you can then enter more trades. You know, so the more trades you have at break even, or the more trades that are risk-free, the more trades you can enter. I don't know if that helps.
Yeah, absolutely. Yeah, that's helpful. Thank you.
Yeah. You know, but the bottom line is not to necessarily enter every single trade. If I was to give, I mean, I don't think I'll be. I mean, obviously, I'm going to have to be responsible with the way I give trades. I mean, when I say I'm going to be, you know, it's going to be a signals blitz. Basically, when I say it's going to be a signal blitz, it's basically going to be the case that I would obviously space out the trades, you know, in such a way that, you know, people do not people who get desperate or get greedy, you know, do not start entering too many trades, you know. So I would space them out, you know, wisely, and obviously expect people to or maybe begin to add more trades as some trades have gone into profit, and I know that people would have moved their stop losses. So I mean, that obviously is going to be good practice for people to begin to move their stop loss. That's part of managing your trade, you know, moving your stop loss to break even whenever, you know, and the price has moved. Okay, I mean, I suppose there are no more questions. I mean, we have done, you know, we've done over 1.5 hours, I believe, on this session. So if there are any more things that could be added, I would obviously post it in the Telegram group. Now, for those of you who are going to be watching this, you know, as a replay, if depending on where you are watching it, I would say to join our Telegram group, because that's where the signals are going to be given. The signals are going to be given, you know, most of the signals are going to be posted, you know, well, in the Telegram group. You know, some of it, I believe, will go on our Facebook group. Yes, we're going to be doing that as well. You know, so the Facebook group link, the link to the Facebook group will be added to the Telegram group, so that if you're not part of the Facebook group, you can actually join as well. Samsung, I mean, can you tell me what your name is? I can't see what your name is. I don't want to refer to you as Samsung. Okay, Hussein. Okay, fine. Okay, Hussein, I mean, I have a video on trailing stop, which is perhaps one of my most popular videos on YouTube. You know, we have, you know, close to 10,000 views on that. You know, I will post the link on there, you know, so you can watch that. I mean, people have loved that video. They said it's one of the best videos they've seen on trailing stop. So I would say to go watch that. I'll post the link on the Telegram channel so you can watch that. Okay, guys, I mean, that's basically all we can take for tonight. I suppose we've covered a lot more than we planned to, but that's fine. That's the way we roll in GWA. Okay, guys, I will see you guys even on Monday. I'll see you guys on Monday. I usually would wait for the market to settle, you know, into Monday, close to the London session, before I begin trading. I mean, some people trade, you know, the market open and Asian session on Sunday, but I don't do that. Okay, guys, thanks for attending the webinar today, and God bless you.